Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, I'm sure we'll get into the precious metals, but first and foremost, look, we are still hearing a lot of rhetoric about a crash coming for the markets, even an economic crash, more along the lines of another recession for a number of different reasons. A lot of people pointing to the inverted yield curve, and a lot of people also pointing to the banking issues that could perk their head up again. People pointing to commercial real estate that could be a big issue for the economy. But it has been interesting to see the markets rally for 5, 6 months now. And you know what? They're actually holding some of these levels, again, in the face of a lot of people being quite negative. Now, we have also heard a balanced argument that says these stocks broadly reprice themselves and the bottom could be in. And that's what the market is telling us. What side do you land on here, Jordan? Is a big crash in the markets coming?
I don't think a big crash in the markets is coming. I mean, we have to define that because for some people, if the market goes down 20%, they say, oh, well, that's a crash. I mean, to me, a crash is what happened in 87, 2008, 1937. I mean, when you get a real sharp, accelerated move to the downside, I mean, even sharper than what you see in a normal, worse than average bear market, I would say. The number one thing for me right now with the stock market and the economy, well, looking at the stock market, positioning is really too bearish in the stock market for it to crash anytime soon. So I think because of that, you're going to see the path of least resistance for the stock market right now is probably higher. So we're trading, 4150 or so. Maybe it can reach 4400 or I don't know, even 4500. I think that's the risk. The risk is short term, medium term, the market can continue higher and that it's going to break some levels and really suck people in. I mean, there's already technical people who are saying, oh, you have these bread thrusts. This is a new bull market. And I think if you see more strength in the stock market, that'll only reinforce those calls and more people will put aside their bearish bias or their bearish thesis and have to admit, well, we're rebounding. The market's moved up a lot. This is probably a new bull market. So I think you could have that happen over the coming months. However, if you look at the economy and the yield curve inversion and the threat of recession, I think we talked about this in the last month or two. If you look at the average or median time from when the recession hits after these various yield curves invert, that's pointing to around September. So I've seen some calculations saying it could be in August, could be September, that time frame. And so the market really starts to roll over badly. I want to say, like, I don't have the chart in front of me, but it's about a month or two before the recession hits. And then when the recession hits, that next 4 or 5 months, like that 6 month period right there, that's when you get the worst declines in the bear market. And so given the strength that we've seen in the stock market and where we are in the calendar, we're in April right now. And so a lot of these curve inversions are just using the average or the median. That's still 4 or 5 months away. And again, looking at the history, the market based on a recession doesn't really start to tank until 1 month before the recession is going to start. So based on all that and the sentiment as well, there's still plenty of time for the stock market to push higher here, suck in more people right before the recession actually hits. And, regarding the banking, the commercial real estate and all those things, I think you will have those problems eventually. I mean, I recall 2007, it was so clear the housing bubble was blowing up. You had Bear Stearns. In early 2007, you had some, and he was able to be swept under the rug. And I remember the same thing where people were talking about, oh, the sentiment is just so bearish. I mean, the stock market's at highs. I mean, this is fine. We're not going to have a recession. Then it all just fell apart suddenly, basically, and they couldn't stop it. Now, I'm not saying we're going to see an exact repeat of that, but I think once we get past the summer, you could see, a rhyme of that where the recession actually hits, the market's rolling over and falling, and there's a lot of selling. The market goes much lower. and it just looks completely different from where we are here and now.
Yeah, Jordan, it's just so interesting because we've also seen periods of time where the markets are weak and the economy is doing okay, and vice versa. We've seen it where the economy is struggling and there's no growth or slow growth or problems under the surface, and the markets ignored it and just kept trucking higher. Some of that was on the back of the central bank liquidity, but it's sometimes the markets can be divorced from what's going on in the economy, is the point. And if we do start seeing the recession build a little bit more downside pressure in the economy later this year, maybe the market does follow it down. But I'd be curious to get your thoughts on a crash. When we hear the word crash, it's such a charged word. That's, like you're saying, a sudden drop, like the '87 Black Monday crash, or the Great Financial Crisis crash, or you could even argue the pandemic crash in 2020. But that's a far cry from and more orderly correction or a bear market that develops. So what do you think that it would be more constructive for gold and for silver and the mining stocks if it was more of a gradual bear market that develops later in the year in the markets versus the quote unquote crash scenario?
Well, either scenario is going to be super bullish for precious metals, gold and the senior gold stocks first and foremost. And yes, that's a good point that you're asking about, because when you do get that crash type of decline, everything gets hit. But, if it's something different than that, then I think precious metals won't be hurt that badly. It really depends. Again, I always say this leading up to it, the stock market and gold stocks right now have been going up together, although gold stocks have been really outperforming strongly. So that's one scenario where if we see gold break out here and it's able to get to 2,400 or so over the next couple months, and the miners keep running and they get really overbought, and we have this great move, and maybe initially it looks like there's going to be a recession, and then when the market starts rolling over badly, then you could have a correction in precious metals at the same time. I mean, in that scenario, gold is going to hold up the best. We know that silver and the gold stocks will get hit with the stock market, but people should also look at 2001, 2002. There were a couple nasty declines in the stock market, and the gold stocks held up really well. I mean, yeah, there were periods where they consolidated, but I posted a chart on Twitter probably a week ago. But if you look at that, that is completely different than what happened in 2008 in the COVID crash. And I think that scenario, the 2001, 2002, is more likely for quite a few reasons. And one big reason is the Fed's already been tightening a lot. And so, yeah, they'll probably be done here in a month or two or whatever it is. When the market rolls over, they're going to have to start cutting rates. I mean, obviously the market's already sniffing out. We know that the market's right. I mean, the Fed they're not going to acquiesce to the market until the economy rolls over, hits recession, unemployment starts rising, inflation expectations crash. That's the point when they're going to start cutting rates. And by the way, if precious metals are running and leading into that, I think that when the Fed starts actually cutting, that could be when you have the first correction in this bull market in precious metals, because the precious metals are already sniffing that out, as well as the stock market. They're sniffing out. I mean, the market's already priced in a lot of rate cuts in the second half of the year. So the market's already discounting what's coming. And so it's also helping the stock market as well. So I think if we get to that point, I don't know if it's August, September, October, and the Fed has to start cutting, precious metals have had this huge run higher. That's the point when they could actually start correcting, because they would be impacted by the stock market, of course, to some degree. And the stock market, typically it does well and it performs when the Fed hikes. But when the Fed cuts, that's when the stock market performs poorly. And it's setting up for that, because if the market rolls over, unemployment rate goes up, that's really bearish for the stock market. That's when the Fed's actually going to have to cut. So that's just something I'm thinking about for later in the year. But yeah, I don't see this huge 2008 type of decline coming. And I'm just really surprised. I mean, in our gold world, everybody is talking about this. Even really, smart people, big money managers are saying, yeah, gold's really bullish, but it could have this, big decline, when the recession actually hits. I mean, it's really smart people who are talking about this, not just gold bugs, but this sentiment seems to be everywhere. And to me, it's really, I don't want to say it's ridiculous, but everybody's waiting for like this big, huge decline. When you go back a year ago, gold was down 20%, senior gold stocks were cut in half in 5 months. The juniors obviously lost even more than that. And, suddenly people are worried about that there's going to be this huge crash or decline coming. At this point, the more I hear about that, the more I grow confident that the risk is something more like 01, 02 than 08.
Well, it was interesting last year, right? The gold stocks and gold went down for, what was it, 6, 7 months in a row, and then they almost went straight back up for that amount of time, except for that February correction that we had. Jordan, if you're seeing that the markets have already priced in rate cuts, a number of rate cuts by the end of this year, that kind of ties in with a recession, but not really. What do you think gold is pricing in at its current levels? Is it already pricing in the recession? It's clearly pricing in a Fed pause, but everyone knows that's coming. Further out, what do you think gold is already pricing in right now?
Yeah, I think it's definitely priced in the pause. It's anticipating rate cuts, and I'm not sure on this move if, based on everything that's already happened, gold can break out here and make a big run. Maybe something else has to happen. I'm not sure, but the technicals look pretty good. That based on the momentum it already has, it can probably correct here for a little bit longer, then have a real chance to break out. But I don't think precious metals have priced in a huge amount of rate cuts. I'm just pointing out that a lot of times in markets, when the news actually hits, it's already been discounted, and then you can see a correction and sell off. And so that's my thinking. I mean, obviously rate cuts are not going to come in the next month or two, but if we get the first rate cut in September, perhaps, or August, if things really roll over, then if gold hit from here until then, if gold and precious metals have performed really well and you have gold at 23 or 2400, then that would be the point in time when they're setting up for the first correction, the first real correction in this new bull market, when the Fed actually starts cutting rates. And, who knows, maybe the Fed cuts once, you have a sharp correction, and, the next time the Fed cuts, that's the bottom of the correction. I mean, I'm just thinking out loud. But yeah, if we get quite a bit more strength here in precious metals and continued higher highs in the coming months, then I think that first rate cut definitely could be a point where they would sell off. And along with the stock market, because remember, the Feds, they're only going to cut rates if the market rolls over and unemployment goes up. So that's why that my thinking, I think, makes sense with respect to precious metals, because they would probably correct with the stock market at the same time, especially if they get really, really overbought here in the next couple months. If precious metals fade here and the stock market keeps going higher, then the stock market eventually rolling over and the Fed having to cut, then maybe in that scenario, you would see precious metals go a lot higher at that point, and then they wouldn't have the big correction that everyone's worried about.
Yeah, Jordan, you're reading my mind. That's exactly what I was going to ask you, is like, what if the reverse happens and we don't see a big move higher in the precious metals going into that, but the general equities do, and then that could be the trigger to get things going. But I'm maybe just backing up a little bit and looking at the technicals on gold. Everybody is still waiting to see, is gold going to blast through and make a new higher in this move, or is it going to get rejected as yet another failed attempt to really break out here? When you look at it technically, I mean, it's hard to see, what the fundamental catalyst could be that would really drive it higher, because it was the banking crisis that really got things going again in March when it was already starting to correct. But you pointed out that in the bull market, if it started in September to November in that range, that we already had a correction in February and March of about 8%. And then in a bull market, especially a new bull market, that the corrections are going to be more shallow and maybe not as long as people expect. So if that February and March period was the correction, is there enough technical momentum now to actually break out on this move? Or do you think that we're going to have to correct and consolidate longer to build the energy to really break out to new highs in gold?
I'm not sure. I mean, obviously we'll find out, but I will say early in these new bull markets, gold can find support at the 50-day moving average, or quite a few times in my study of history, it bottomed around the 150-day. The 150-day right now is still in the low 1800s, whereas the 50-day right now is at 1921. So watch how gold acts around the 50-day. If it bounces above the 50-day, and holds there pretty well. Maybe it has to test it twice over a period of a couple days, something like that. If we get that strong bounce off the 50-day, then I would think it's in position where it can make the breakout move and something else doesn't have to happen.
Okay. Well, Jordan, that at least gives us something to watch on more of the daily charts then to see where gold's going to go and where it could bounce from. Some of those moving averages we can all punch in and follow along with. Overall, precious metals continue to look strong, and the stocks have been outperforming the broad averages. Even though the broad averages have still been doing okay, it has been encouraging for the precious metals investors to see their stocks, a wide range of them actually, doing quite well and continuing to do quite well. Jordan, thank you as always for your time. It's great chatting with you. We'll chat with you next week. Have a great rest of your week.